Acuvi has published a report for the second quarter of 2026, and standing beside me I have its CEO, Nils Sjöholm. Welcome.
Thank you very much. Good to see you again.
Good to see you too. You also have your CFO here today, Jens Lagergren, and we'll hear from him in the Q&A. But before that, you have prepared a presentation, so I will simply hand over the word and return later to ask some questions.
Thank you so much. So, the idea is that we've been speaking about the growth potential in the company for so long, and everybody knows that there is great potential, but I really wanted to just mention a few of the highlights that we can see. And in this particular presentation, I was just going to show a little bit more about the semiconductor and medtech and life science segments. And I think these are super interesting. As you will see in the presentation, there are a few more interesting segments. We do not have time to deep dive into all of them, but at least this will show you where and why we think that there's a huge growth potential for Acuvi going forward. So first of all, these are the segments that we have defined our customers, the categories that we place them in. And this could be debated, and it's sometimes hard to distinguish between where specific customers should be placed. This is how it looks right now, and it's important to point out that these segments do not symbolize the revenue that we're generating today. So this is actually looking into our complete customer base. If you were to segment based on revenue, it would look a little bit different. But what's interesting here is to see that the top 4 segments is actually covering almost a little bit more than 90% of the entire customer base. So it gives you a little bit of an idea on where we are right now and especially where we've been in the past. So we have been speaking about some potential areas like space, which we think can grow a lot. So currently a very small part of our customer base, and because of its nature, it's extremely difficult and high-tech area. We don't expect the number of customers to explode in that segment, but it's definitely worth to keep an eye on. So let's start with semicon. Everybody knows that the technology in this arena is actually exploding, and it's just a matter of thinking about all the equipment and appliances and the products that are using chips. So when we mention chips, we usually think about graphic cards or processing power and so on, but it's important to understand that robots and drones, which are just 2 areas that are expected to explode in the future, they will require chips as well as all the cars, the dishwashers, lawn mowers, and so on. If we look at AI and data centers, because that's also one of the topics where people would associate semicon to be a big part of, and I've found an example of Amazon, just one company, of course, one of the bigger companies, but still just one of them. They've invested $130 billion into their AI and data center capacity last year, looking to invest $200 this year, and we're talking billions of dollars here. So I really think that this exemplifies why we think that there's a huge growth potential for chips in general. But as you will see, we are not making the chips. We are a very important part in the chip making process. Sorry. So these are 2 examples of where Acuvi, and in this case especially PiezoMotors, are present. So the first application is lithography, and this is an application where our customers design and manufacture chips. And when you do that, you do it layer by layer. You're printing a layer on top of a wafer. And it's extremely important that these prints come out exactly on top of each other. And this has to be done down to a nanometer level. So of course, if you're going to position something that's printing in a nanometer precision, it has to be something that is very reliable and very, very, very precise, which is exactly what PiezoMotors is doing. Once the chip has been manufactured and they're placed on the wafer, you need to inspect them. And that's being done by instruments that we call, or we categorize as metrology equipment. And you might have seen on LinkedIn or some other channels that we are present in that we have announced some collaboration with Nearfield. So that's one customer. And we are usually a little bit restrictive on mentioning customer names, but we are doing webinars and more with them. So that's fine to mention. But this is a great example of where our technology comes in. And also we've been speaking in the past about designing projects, for instance. So we want to be with customers at an early phase so that we can help them design in our components in their bigger solution. And this is a customer where we have done a lot of work with in the past, and we're already looking several versions ahead in the future. So it's really exemplifies how we want to work with our customers. So looking ahead, what we're doing in this space to try and capture some of this market, I mean, there's just so much that you could do. But a few things is that we know there's a big semicon congress coming up in Taiwan called Semicon. And we will be present there. It's a joint collaboration with Business Sweden, so we're part of the Swedish booth basically there. And as I mentioned a bit earlier, just next week we are setting up a webinar, a semicon webinar, where we have invited not just ourselves and customers, but also Business Sweden and representatives of the academia. And it's going to be a very interesting webinar where we have invited a lot of customers, and we expect a very big turnout. And we can see already by the number of registrants that this is a field that's actually growing significantly. If we look at medtech and life science, we are doing a lot of interesting things there as well, and we're helping a broad variety of customers. This is an area that has been partly dominated by the developed countries in the past, because if you wanted good health care, you'd have to be in one of those countries. But looking further ahead, you can really tell how countries that we used to recognize as less developed, such as India, Pakistan, a couple of countries in Africa and so on, they're all investing a lot in medtech and healthcare. And I think this will drive the need for equipment in that arena greatly. And we are already present with Sensapex solutions in micromanipulation categories. We're looking into IVF and fertility treatment, where very precise motion of needles and pipettes are required. And we also know that there are plenty of other medtech arenas where high precision is going to be needed, such as surgical robots, for instance, which we have been mentioning in the past as well. I think this is really a good example of why we believe that the future is really bright for Acuvi. And two examples within this arena is, for instance, developing a positioning of a collimator inside a cyclotron. The environment inside a cyclotron is usually very harsh. It can be vacuum, it can be very high magnetic fields. And when you aim to achieve I lost the word. It's a cancer therapy where you radiate the patient with photons, basically. You need to be filtering these photons so that only the photons that come out in a specific angle targeting the cancer cells pass through the filter, or gantry as we call it. And it's also important to make sure that just the right energy on the photons are the ones that are passed through. And adjusting that gantry or collimator is done with a very high precision. And we have some very interesting things happening in that arena as well now going forward. IVF we've spoken about. I chose to show you a little bit more about that because there is great potential for Acuvi and especially Sensapex in this case. We've already been working with micro manipulators for quite some time. And when you're doing IVF and you're looking to fertilize an egg, this is usually requirements could be that you basically just have 3 to 5 eggs to work with, and those are the last eggs available. So the outcome and being able to increase the odds for a positive outcome are really important. So being able to penetrate the egg cell membrane as gently as possible is very important, and we are able to do this with our micromanipulators. And I think we have been speaking about IVF for quite some time, but I will also show you later on that there are some significant steps taken in this direction. So when we look at this now, we have already developed prototypes for this. They are now placed with key opinion leaders where we're looking to get some feedback. We hope to be able to launch some of these further developed prototypes already this year. It would probably be to academia and research in the beginning. And then hopefully rather soon we can reach the markets with a proper clinical instrument. And there's a theory here, at least that I would like to emphasize, which is the fact that there are different kinds of certifications required on the various markets. So we know when it comes to IVF that the certification requirements in Asia are lower than for instance, Europe and the US. So it makes Asia a very good market to start in. The team that we have in Asia have all been working with IVF in the past, so it could be a really perfect fit to pursue this path, and that's why I think there is great potential. We will not commit to any numbers, but this is surely could be something very big for Sensapex. We will have the option of going with a partner. There are a few well-established partners in this arena, or we could do it by ourselves, going direct. We could choose to do parts of the instrument ourselves or the whole part as well. And we may even look into the possibility of having the consumable business as well. It all depends on where we think we get the best risk reward, I would say. But that's explaining a little bit why I think the IVF path is of such interest. Looking at growth, I really wanted to highlight something that stands out for us, and I mean the team has really been working very, very hard to achieve good numbers in terms of sales. And when we look at our investment that we made in Asia with the office and the team that we have placed there, it's really satisfying to see that the growth is coming. So this graph is showing the quarters 2025 and the 2 quarters of 2026, and we can already see that we are growing more than 100% in the first 2 quarters of 2026 compared to the same period last year. And like I said, given that we have the team with IVF experience from the past, I think we're really well positioned to do great things in Asia. And we also have all the semicon industry being there, everything that's happening in that arena. And I think this sort of explains why I'm so positive about that region in the first place. Looking at PiezoMotors specifically, I wanted to show this because we got a lot of feedback that we're not showing enough numbers, and bear with me, we're working on it. With 3 companies in the group, I think we can afford being a little bit more precise on the details going forward. This is a first small step in that direction. And here you can at least see that the first half of the year has begun really, really well for us. We are so far 100% above last year, but I wouldn't really stand here and say that I believe in the same extrapolation for the rest of the year. But let's just say that we're at least aiming to grow PiezoMotors 50% at least for the full year. And I think that's also very much needed. We have lost a big business in the US company that we have announced. And given the numbers that were presented, you probably all know that that was about 50 million per year, at least in 2025. That's going to hit us by 20 million this year and probably another 30 million next year. So seeing the development for PiezoMotor and given what we know about the segment and the industry going forward, I would say that we're well positioned to bridge the gap, but it's not going to be easy. But I did say that I think we can bridge the gap for this year, and we're really looking to do that, which I'm really happy for and grateful for the team to have achieved that. I think that was what I wanted to share a little bit. So we didn't have time to go through all the segments, but I think there are a lot of segments that are super interesting and very, very hot, so to speak. And I think Acuvi is very well positioned to capture a big part of that.
Thank you very much, Nils. We'll also invite a new face here on the stage in the form of Jens Lagergren, who is the company's new CFO. And I thought we could begin there. Why don't you introduce yourself and telling us a little bit about your background?
Yeah, thank you. Happy to be here. Yeah, I'm Jens. I've been with the company, started as an independent financial consultant in March and employed as CFO as of June 1st. So not very long, but 6 months coming up. Before that, I was my own independent consultant for a couple of years, and before that I've been CFO for smaller companies also listed on the Nasdaq First North Growth Markets.
During this Q&A we will of course talk about the quarter, but before we do that there has been some questions in the chat relating to the presentation. First of all, could you expand on where the collaboration with Conceivable Life Sciences stand today, the commercial model for Acuvi, and when it might start contributing to revenue?
So Conceivable is definitely one of those partners that we know are could be a potential partner for us. There are some others. We have done a lot of collaboration with Conceivable in the past on the micromanipulators already, so that would probably speak a little bit towards favoring them. It's a little bit too early because, I mean, most of these partners also want to see some real prototypes that are ready to launch before they truly commit. We would look into all of them still. And when it comes to the revenue contribution, I think I was as precise as I could be that we're looking to launch something clinically already next year. There will of course be a ramp-up period, so it won't hit the roof the first year, but I think it's quite reasonable to say that within 2 to 3 years then we should really see a significant contribution, and especially given that Sensapex is one of the smaller companies in the group, that contribution could be already in 2 years.
Mm-hmm. And speaking of within 1 year, there has been another question here that points to what you talked about in the presentation might be in the longer term, 2 to 5 years, but looking ahead 12 to 24 months, what do you have to say in the shorter perspective of that? Why should you invest in Acuvi?
Okay, so first of all, yeah, those numbers that we showed, they're comparing and they're showing a bit of the growth in the next coming 5 years. But look at PiezoMotors in 2026, already 100% ahead. There's plenty of work that can be done already with what we have, the existing customers, the existing products. When we look into the numbers, we can see the growth of new business. We categorize that as either a completely new customer that we have not been working with in the past, or could be an existing customer like these big global players but a different department, or it could be the same customer but a completely different project. Those would all be new business, and we can see an increase in the new business which is significant already this year. However, they do not contribute as much to the total revenue already. So despite that, we're still growing, and that's mostly coming from existing customers.
Moving on to the second quarter then, as you described it, Nils, it was a disappointing second quarter. Net sales increased by around 3 million to 50 million, which is of course positive, but operating profit turned negative 9 million. It's quite a contrast between growth and profitability. How would you summarize?
So I mean, first of all, we are not satisfied with this. I think everybody who's heard these presentations know that we're aiming to double everything, and I would rather double it very soon than later. It's very disappointing. I think the work that has been done in the background is not what is seen in the numbers and the report itself. That's also why I wanted to highlight that we are doing some great things as well. Of course, I think when it comes to the numbers, maybe Jens is better to answer them, but the profitability was not where we wanted it to be, of course. When in terms of talking about margins and so on, I think maybe, sorry. So I mean, maybe you'll get to those questions actually. Let me not jump ahead.
Of course, we'll get to profitability, but in terms of expectations, when you headed into this quarter, did you have higher expectations?
It's not easy to answer because I'm very focused on sales and the customers, and I think we've achieved what we wanted to achieve in that part. When it comes to the profitability, that's not just how effective we are, it's also looking at what costs we have and what we can do in terms of cutting the costs. And we're doing a lot of things there, but everything is not shown immediately, like probably Jens will explain later. But we cut down on personnel, for instance, but that's something that you will see further on later in the year. We cut down on several costs that we will see annual decreases of, but they won't be affecting this year so much, at least not as much as in 2027. And I think in total we are really aiming to cut costs by more than 10%, so which is quite significant for a small company, I would say.
There's a question in the chat, Nils. After almost a year as CEO, how do you currently feel about cost control in Acuvi?
I feel that we have the plan that we need to achieve what we want to achieve. Some things are slower than I wish. You can trust me, I do what I can to sit down with the team all the time and emphasize how important it is to cut the cost, especially like that big distribution deal that we lost, for instance. That's going to affect us. But saving money is equally important as making money almost sometimes. In the long run, growing top line is all that matters. But in the short run, given the situation we're in, cost control is going to be 100% important.
And Jens, perhaps a question to you. The quarter was weighed down by a lot of one-off items affecting EBITDA, including items relating to the CEO transition and FX effects. When we remove these items, how do you feel then about the profitability?
I mean, of course, the profitability is better when you remove those items. But for me, as a new CFO of the company, I feel that I'm not satisfied, I'm not happy with the result even removing those. Those are costs that we have, that we've been dragging, and we have to take now in this quarter, and it affects the quarter. It doesn't really affect my view of the quarterly results. I mean, they are what they are. These are explanations, but it's still a disappointing number.
There's a question mark around the gross margin as well, that fell from 65% to 51%. There are duties of 1.9 million, but that only explains part of it. What explains the rest of it?
I mean, looking at the comparison for the gross margin in 2025 for the second quarter, the difference is quite big, as you say. I think a more relevant comparison would be the full year gross margin 2025 that ended up on 55%, which we are very close to now. I mean, we are still below, but with the full effect of the tariffs and duties, as we say, we are basically on the same level as last year, the full year. So I think that the comparison quarter to quarter is not really relevant here in that sense.
The viewer continues and asks, what level of gross margin do you see as normalized moving forward?
I would say, I mean, in the situation that we are today, around that 55% as we were last year. But we are, I mean, working, as Nils just said, we are working throughout the company and looking at improving the financials from all directions. I mean, looking at cost management, pricing strategies, finding and implementing efficiencies throughout the organization, of course, driving top line in a organized and structured way.
I think also, I mean, the aim is to grow that percentage, of course, and growing PiezoMotors will be part of the key to getting higher group margins. We know that big distribution deal that we lost, that is a, so to speak, low margin business. That will affect the margin as well. So it's really hard to say what the normal margin would be, but we would definitely aim to be higher going forward.
Moving on then to some of the highlights in the quarter, you write two of them in the report. There are two orders from two of the largest orders from the U.S. defense sector worth $1.3 million and $1.9 million. Do those two orders refer to the same client?
No, they're actually different customers. So very different kind of applications as well. As you know, we can't really comment on exactly what our solutions do for the customer, but they're in two different applications.
Do you expect defense to become a more important part of Acuvi moving forward?
I would definitely do so. We can see defense industry growing in every aspect. The difficulty for us when it comes to defense is that we cannot really chase these customers. They're very secretive. The US defense would never allow a sales call coming to them. They contact you. So the only way to grow in this segment is that to deliver the projects that you do have with top-notch quality and be given that support that those customers require. If you do that well, they will come back.
Talking then about your companies, and we'll begin with PiezoMotors that doubled their sales during the first half of this year. There is a question from the chat that is curious, since PiezoMotors doubled their sales in the first half of the year, but the group only grew by 3%. How did the sales and order status develop in PiezoMotors, Sensapex and TPA individually?
Okay, good question. So we've been speaking about this new CRM system that we've implemented, and that gives us a lot of details and insights that we did not have in the past. So I will speak for this year. We installed that system early January. We didn't capture the full year's orders, but look at it this way. If we are achieving, let's say, 200 million SEK per year, you would ideally see an order intake of roughly 50 million per quarter, right? Of course, it will never be exactly 50. It will vary a little bit. So what we can see is the second quarter was a really good quarter in terms of that comparison, much higher than 50. But driven also by the two defense orders that you just mentioned, for instance. Q3 is looking really well as well, on track. And what we can see in the future, we'll have to come back to. But I think the order intake is really good. When it comes to the revenue, yeah, the group is stable, but the company in the US, TPA Motion, is trailing a little bit behind. It does not look like the business apart from that distribution deal is going to be affected in the full year. I think we can achieve that. So I'm optimistic about the full year, but I understand the question and I knew it would come.
And perhaps a question for the both of you. How do you view the potential prospects of reporting these three companies separately?
You know, we had that discussion, and I think I would be very much for showing exactly all these entities instead of dividing by products and standard products and custom solutions and whatnot has been in the past. I think it makes more sense as long as we're a group with just three companies, or legal entities were more, but I mean 3 manufacturing companies. I think that's a really good idea. Ultimately, it's a question for the board, and I think we have to be the ones suggesting it. But once we've suggested it, I think they could be for it.
And looking at the growth that you're experiencing in the first half of 2026 in PiezoMotors, do you expect that to continue moving forward?
Like I said, I would be very careful to extrapolate that and say that we're going to double for the full year as well. And I don't think the data supports 100% growth in that perspective. But I'll be bold enough to say that even if we're not there yet and we cannot see those numbers yet, I still believe in 50%.
And TPA then, there was a loss of a major distribution agreement. Can you go a little into what happened here?
Yeah, so I mean the thing is we announced in May 2025 that this customer was growing their orders from 40 million to 50 million, so that's a public figure. We lost the deal, and it's not that we lost it for the full year. We actually have the customer until August, so that's now this year. So this year is not going to be affected fully by that number. But of course, like I said, it's about 20 million this year, and we're looking to bridge that gap. But for next year, it's an additional 30 million. So yeah, this is not a self-playing piano. It requires a lot of work. And I think it's a little bit too early to say what I think about 2027 right now. I'd like to get a little bit further ahead into this year before we do that. But I mean, we're working really hard. We have lots of potential in pipeline. I think we can make it, really, I really do.
And continuing then on the TPA track, you've appointed a new CEO, Gary Mann. What needs to change at TPA for the business to return to growth, and perhaps most importantly, when?
So one of the things that I've experienced since I joined Acuvi is that what we say in terms of engaging with customers in an early phase of their design projects, this is super important. And I believe that the team at TPA did that very well over the years. That's how they grew their entire business. They started as a distribution company and basically grew it into 50-50 distribution and custom solutions. But in the last years, we have not seen enough design wins. We have not seen enough emphasis on sales and growth and having that business mindset to take TPA to the next level. I think now in Gary Mann, we've found a leader who really has the mindset that we're looking for. He has the skills and the experience that is relevant to a company like TPA, but he also has that entrepreneurial drive. So it's really important when you own a company overseas that you find these people that have that drive and they want to achieve something. And that's something that you cannot put in a role description, but it's something that you can feel when you start talking to people and asking about their experience and how they achieved certain things and so on. So I have very high expectations for TPA, and this was a change that was needed also in the past. So I think it's a good thing. I don't have much more to say, but I'm really comfortable with Gary so far.
But speaking of change then, what would you need to see to sort of measure or quantify the success of a potential turnaround for group as a whole, that is?
So I mean, what I see, it's not really the same that you and the investors see when reading a quarterly report. I see everything that's going on behind the scenes, where we have done so much to build the foundation. And this is an example where we may say something and it takes time to show and so on. And yeah, we spent half a year. We haven't completed everything, but the level we're at today is really a completely different animal than 1 year ago, and we are almost there. So now is really the time to focus on growth. Now is time to show you what the markets look like, where they seem to be heading in the future, and to be putting on that pressure on ourselves to go and capture that part of the market. So a lot of the work that we've done, Jens, not the least, is to, I don't like the word of clean up, but just putting that structure, the foundation. And now we're going to build the house.
Exactly.
And with that being said, a question from the chat: when will you be able to become profitable in the long run?
Well,
yeah, and that's $1 million question, of course. But that's the effort that we do. As I said, we are working on all fronts to improve the financials of the company. And my goal, and I think Nils agrees with that, is a long-term profitable growth. I mean, I'm not looking for big swings or big promises of quick wins and a quick return, but rather a long-term profitable growth that continue year after year, quarter after quarter, year after year. And I think that's the best way to build shareholder value as well. So I mean, when we are there, hope sooner than later. But I wouldn't speculate now on a certain quarter or.
Let's just say that the aim is that it will come very soon. I think the second half of the year looks a lot better than the first half of the year. As I said, also we have some headwinds going into 2027 from that big deal. I mean, if it was 50 million and we're doing 200 in the group, I think everybody can calculate for themselves what needs to be done. So if we're basically at the break even, so to speak, now, of course, you know, we have work to do, but we're all prepared to do it. And I think the message to the team, and the teams, I should say, is really, really clear. We're going to succeed. I'm very convinced. The timing question is difficult, but I think we did a lot of work already.
You do mention in the report that you expect the second half of this year to show improved financial results, but you no longer expect to reach the EBITDA target that you communicated at the start of the year. Will there be a new target?
I think if there's any lesson learned in this, it should be to be very cautious about those kind of targets. Although we were careful enough to say that this is an internal target, it was not a formal guidance for the market or so on. I think it just shows that we're on that break-even point that swings could look drastic. I would rather refrain from any new targets for the time being.
Yeah. There's a question from the chat. We'll talk about financing in just a moment, but before that, question from the chat. You say semicon and space are starting to show order intake in the second half of this year. Can you quantify the order intake or backlog, and when should this become meaningful revenues in the future?
They're already there, both space and semicon order increases, because that's what's driving the growth that we've seen in PiezoMotors. So it's nothing that we have to wait for.
And do you think, or when can it become meaningful, so to speak? I wonder what the definition of that is from the viewer.
Yeah, I think 50% growth so far, or 100% is meaningful. If we end up 50%, that's really good. We can see the semicon industries moving, growing a lot, and we can see companies associated with that segment growing a lot. I would be very, very surprised if we cannot clearly see or come back and show how much we've grown in those segments as well. But like I said, for sure, the 100% growth 2026 versus 2025, that's purely semicon and space.
Moving on to financing then, the cash reserves was 19.8 million crowns at the end of the quarter, and the cash flow was negative 9.5 million in this quarter. How comfortable are you right now in the current financial situation that you're in?
Well, any CFO wouldn't use the word comfortable, I would say. But that said, I mean, we have big fluctuations. We're a relatively small company, and cash flow fluctuates month over month depending on when we have pay for large deliveries or when we get paid from our customer, especially in the US where we have large deliveries. So I'm not that concerned about it. I think we have a very negative cash flow for the quarter, but the operational cash flow for the first half year is still positive. And I think with the improvement that we expect for the second half year, I think that will continue to improve. So comfortable, so and so, but I think confident for the future.
I'm sorry.
So sometimes when you're in a difficult situation, the best thing that you can do is to focus on the process. And that's what I'm trying to explain, that I mean, we've done so much to improve the results, but we're doing it based on the processes themselves. So I really think we have a brighter future ahead rather than behind of us.
And another $1 million question from the chat, perhaps. Do you see a potential need to raise money in the future?
I don't want to speculate about that either. I mean, anything can happen. I mean, and if that we would reach that situation, of course, that would be announced and follow a due process for such a capitalization round. But right now, I don't foresee that.
I would be very disappointed if we would end up in that point, to be honest. I think raising capital for acquisitions, that would be something else.
Then I'll finish off this Q&A asking throughout the rest of the year, the next 6 months, what should investors look for?
Well, from my point of view, it's definitely making sure that we're bridging the gap in revenue that we know we're heading into. And the second thing is the bottom line. I think we've been talking about cash flow the whole time since I started, and I think that's where you'll see the direction of the company.
And Jens, you're in agreement with that?
No, I agree. I mean, that's the key. I mean, generating positive cash flow, and I think we are on the right track for that for the coming next 6 months.
Then Nils and Jens, thank you very much for being here, presenting and answering our questions.
Thank you very much.
Thank you very much.